Welcome back to Truality.Finance, where we talk any and all things money. Let's talk about how to deal with the tax man. The IRS allows for many different types of tax deductions, so be sure to do your research and keep track of all the expenses that you may be able to write off. By doing this, you'll be able to reduce your tax bill and keep more of what you earn. Number 2. Understand tax brackets' income strategy. It's important to understand how tax brackets work and what tax bracket you fall into. In the U.S., the federal government uses a progressive tax system, which means that the more you make, the higher the percentage you pay. However, taxes aren't taken out of your paycheck based on your total annual income. Rather, they're calculated based on your tax bracket. Your tax bracket is the percentage rate that's applied to your taxable income, which is your total earnings minus any deductions or exemptions. Once you know your tax bracket, you can make smarter decisions about your income and deductions. For example, if you're in the 22% tax bracket, you'll want to take advantage of any deductions that will push you into a lower tax bracket. Understanding tax brackets can help you keep more of what you earn and avoid overpaying your taxes. Number 3, plan for capital gains investment strategy. When you buy and sell investments, you may have to pay capital gains tax on the profit. However, if you hold on to your investments for longer than a year before selling them, you'll likely pay less in taxes. That's because long-term capital gains are taxed at a lower rate than short-term capital gains. If you plan to sell your investments within a year, you'll likely end up paying more in taxes. So it's important to keep this in mind when making investment decisions. If you're not planning on selling your investments for a long time, you may want to hold on to them until you've had them for at least a year so you can take advantage of the lower tax rate. Additionally, you can offset capital gains with capital losses. So if you have any investments that have lost value, you may want to sell them to offset any profits you've made. By planning ahead and understanding how capital gains tax works, you can make smarter investment decisions and save yourself some money. Number 4. Maximize tax-advantaged accounts retirement savings. One way to reduce your taxable income is by contributing to a retirement account such as a 401k or an IRA. By doing so, you can reduce your taxable income and potentially lower your tax bill. Additionally, the money you contribute to a retirement account grows tax-deferred, meaning you won't have to pay taxes on it until you withdraw the funds. This can help you grow your wealth over time and give you a head start on your retirement savings. So, if you're looking to reduce your taxable income and save for retirement, consider contributing to a tax-advantaged account. Number 5. Use tax credits direct savings. Most people don't realize that there are tax credits available to them that can help them save money on their taxes. These credits can be based on things like having children or other dependents, investing in renewable energy, or being a student. For example, the child tax credit can provide up to $3,600 per child, while the American Opportunity Tax Credit can provide up to $2,500 per student. These credits can be a great way to reduce the amount of tax you owe and put more money back into your pocket. Be sure to look into the tax credits that you may be eligible for and claim them on your taxes. Doing so could save you hundreds or even thousands of dollars. Understanding how taxes work and taking advantage of the available resources can help ensure that you're paying your fair share and nothing more. We hope these tips have been helpful and wish you all the best with your taxes this year. If this helps you understand how to handle the tax man, then please hit subscribe and turn on notifications. There is always more to come. I appreciate your support, so thank you. I'll see you tomorrow where I discuss retirement planning. Please be informed I post 6 days a week with different subject matter for each day, the same every week for easy follow. Until again, I hope your journey is financially free.